Hello, I just wanted to take a few moments to record a quick video for you. Because here at Mountaintop Loan Services, we get a lot of questions from people about what money loans are and investor rehab loans and how they can be used. So we just wanted to do this, give you a few quick pointers, and show you a few things that you can do to go ahead and get things rolling. Now, one of the things that people tend to use hard money loans for mostly is for the construction or renovation of your typical single family house. Especially with the popularity of TV shows like Flip That House, people have gotten a lot more interested in doing that kind of work, and so this kind of financing goes hand in hand with people doing that. But what a lot of people don't know is that you can also use this for commercial properties as well, whether you're getting cash out to do renovations, or if you just need cash out for other business purposes and can't get approved in other ways. Hard money loans for commercial properties are available as well. But back to a residential application, since that's tend to be what most people use here. Wanted to give you a quick example of how much you can borrow, and an example of a house that's pretty typical for what a lot of investors come across. Now, with most hard money lenders, you can get a loan up to 65% of the after repaired value of the property, 65% of the ARV, and that would be the basis point of your loan. Now, one of the most important things that you need to be concerned with is that when you're doing your numbers, that you are very conservative in your estimate of the property value. The lender themselves are going to be very conservative. So if you are trying to stretch the value here, it's really going to come back to haunt you, because they're going to cut that value, and you might end up in a situation where you need to come up with more money than you initially anticipated. So again, pay very, very close attention to those numbers. Now, I kind of give you an example of what a typical scenario looks like. Let's say that you found a house that's pretty run down. But after you fix it up, it's worth about $100,000 conservatively. Now, after you do your analysis of it, let's say we just estimate that it needs about $12,000 in repairs, and we're also going to assume in this scenario that there's about $10,000 in closing costs. Now, that might seem a bit high, but a lot of hard money lenders charge a lot of money to do the loans. But if you compare that cost to what it would cost you if you had a partner who would take 50% of all profits, it's a lot cheaper than going the direction of a partner. And also we're going to assume holding costs of about 2%. In this case, it's about $2,000. Holding costs include carrying any interest payments, utilities, and things of that nature. So the basic formula is this: you take the after repair value of the property, multiply that times its 65%. Subtract out your closing costs, your holding costs, and that should equal roughly about how much you should pay for the property, which in this case is about $41,000. Now, I understand that there's situations where you want to pay more than that, and there's situations where you can pay a lot less than that. But right now, we're just going off of general numbers. So, what you can do to get approved for this, there's a few things that you want to keep in mind just to make sure that you have the best chance of getting approved for that loan. Now, a lot of stuff is going to sound like pretty much common sense, but the more equity that you have in a house after all the repairs and everything is done, the better. So if you're able to get that previous situation that we showed, if you can buy it for less than $41,000, that looks even better. The higher your credit score and the more credit history you have, the better. Now, also keep in mind there are scenarios where credit isn't even pulled whatsoever, but in the majority of the situations, they are going to want to look at your credit history. The more liquid assets that you have in the bank, and also if you don't have a lot of liquid assets yourself, it could be the amount of capital that you have access to. So if you have a line of credit, if you have any partners that have money, or rich uncles, you get the point here. So the more access to capital or that you have, the better. Also, the more populated an area, the better. What you don't want to have is a house that's in the middle of nowhere, where it's going to take a year and a half just to sell it, because most hard money lenders are not going to be interested. They want to see that the area is going to push properties through pretty fast, so that they know that if they have to take the house back, that they can turn around and sell it quickly. So the more populated the area, the better, and the faster the properties move in the area, the better. And also, going back to what we mentioned before, you want to make sure that you have a solid appraisal value. You don't want to do any stretching of values here to try to make your numbers work, because that's all it's going to do is come back to haunt you, as the lender is going to cut that value anyway. So make sure you're going off some very, very conservative values if possible, because if you come in short and the numbers work for your value, well, this is going to be more upside potential for you later. So in conclusion, it's all a numbers game. You want to make sure all the numbers line up. You want to make sure you're very conservative in your value estimates, and you've done all your due diligence and getting all of your repair estimates and everything lined up well. Your credit can be important. In most situations, they do look at credit. Credit does not have to be perfect, but the better the credit, the better chance that you're going to get in being approved. But a credit is not always required. And lastly, you want to make sure that you have a plan that you can show your hard money lender that, hey, you've done your due diligence, you've done the numbers, you've gotten your repair estimates, you've gotten some conservative values, and that this deal is going to be profitable because you've done your analysis. So that is pretty much it. If you were looking for some more information on hard money loans, just come stop by and visit us at mountaintopmtg.net/hard-money-loans.htm, and get some more information for you about hard money loans there, and you can also apply online. Thanks much, and I hope that you stop by soon.